Hey, good day again, Bob, Trade Genius, 15th of December. I want to talk about some things that I think are going to be positive trades for 2019. And the first one I'll talk about is corn. And a number of things are lining up in favor of corn and corn prices. We have the Corn Growers Association are calling for a reduction in production of corn from last year to this year, and the excess supply is being whittled down to nothing, and so it's going to start firming up prices, and you're starting to see it in the prices for the crops on the ETF, and we're going into a seasonal zone now where the next 3 months you can make 10 or 15% on corn. That's number one. Number two is China, and they used to be a corn exporting nation, and now they're importing corn, and they have just announced that their deficit's going to be even higher. So they eat a lot of pig in China, and corn and soy meal are the primary foodstuffs that they give the pigs to fatten them up, and they are increasing their deficit targets. That means they're going to have to import corn. And I know we have this trade war thing going, blah, 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 but the Chinese are acutely aware of the elites, of losing power if their people don't get enough to eat or food costs too much money. And I just want to show you why that puts the United States kind of in a catbird seat here for corn, is that there's only really 3 or 4 nations that can grow enough corn to export. And with the solar minimum coming as well, those corn belts kind of shrink, and there's very few countries that have basically the latitude to be able to shift their corn belts north and south as the weather patterns change. And the United States is by far the country that can do so. Brazil's number 2, Argentina's number 3, and China's been trying to use those countries to do their buying, but they don't have enough, and so they're going to have to come to the American markets to buy corn, and that's also is going to support prices. And so just keep an eye on corn this year. I think it's at least a 10 or 15% gainer, and then we'll see how the spring goes. So it's been trading in this range, basically since the late summer. You always get this downdraft into the harvest. This is part of the games the futures people play, forcing the farmers to accept lower prices because they have crop that they want to sell, and then the farmers protecting their prices by selling and shorting along with them. Well, what happens then starting in December, you can see it in, go back here, 2018, really when the start of the year, you get a push into March. And then here we got a second push into July. And in 2017, it goes similar, but not as nearly as intense, but another 10 or 15% move. So we're at a point now where it's starting to move, and this low in September was interesting to me. Usually it's pushed a little bit later, but another buy signal hit, and if it gets anything down closer to to 16 or 15.50 again, I don't know if it will, is that you probably want to buy, and you're looking for at least a 10 to 15% move. So this is going to be a place you probably could hide out some in 2019 as the stock market gets zany. And so put it on your watch list. I have it on mine. I'll be calling it out. I checked on options for this. It's just they're not that exciting. But this could be a nice way we can grind out maybe 3 or 4% every month or so to catch a bottoming move here and just catch a quick pump, back into the channel or back into the range, and then hop off and wait for it to set again. Because this ETF is under the vagaries of the futures markets, so they're always trying to grind it down, and then you get these impulse buys. and that's what we're going to try to catch. So anyway, thanks for listening. Have a great day, and I'll be pointing out some other opportunities for 2019 as we go along. Bye-bye.